Since its launch in July 2015, Ethereum has grown to become the second largest cryptocurrency in the world. The network presently secures the blockchain using a proof-of-work conscious process, just like Bitcoin. This denotes that crypto miners are using equipment to process data to authenticate transactions and obtain ETH rewards. It consumes a lot of energy to operate and contradicts the idea of decentralization because it is dominated by a small number of larger, more advanced mining operations. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here, we are building a community to help each other stay informed and make the most of our financial gains. The Ethereum chain has seen several upgrades throughout its existence, but the impending merge is perhaps the most eagerly awaited blockchain upgrade as of yet. Although this change was anticipated well before Ethereum became live, it has taken more than 8 years for the network to make the switch to proof of stake. Staking validators will protect this new chain of nodes. These are groups of people that have staked Ethereum in exchange for incentives in ETH, their involvement and presence contributing to the network's security and decentralization. After the merge, the blockchain will be decentralized and rely on a larger pool of validators, which should result in enhanced security. Compared to mining, the entrance threshold is considerably lower. Additionally, the energy required to operate the blockchain should drop by over 99%, and typical block times may decrease by as much as 12%. Proof of stake will also create the groundwork for developments like sharding that will further increase scalability and performance. Due to the involvement of a limited number of very strong participants in staking, there is a claim that the merge might potentially decrease security and lead to even more centralization. Others worry that because they can enforce laws and restrictions on these large corporations staking ETH, governments might more easily influence Ethereum and protocol levels, perhaps filtering transactions. After Tornado Cash was approved, we've already witnessed momentum. Because they will no longer be able to utilize their gear to receive ETH rewards, which is a major setback given how costly this equipment can be, many miners are also adamantly opposed to proof of stake. A proof of work hard fork may appear when the merge occurs, but this won't be simple because most miners will need to agree on a course of action, or else their value would be diluted among numerous forks. Since the switch over to proof of stake on the Ethereum network is just around the corner, traders are hedging their bets in the derivatives and spot markets for cryptocurrencies in preparation for potential Ethereum price movements on the other side of the merge. The Ethereum Merge is regarded as the biggest update in the history of the cryptocurrency industry. The successful transition from proof of work to proof of stake will have a substantial impact on the price of Ethereum and Bitcoin, among other things. Given the significance of the occasion, bullish experts anticipate that the excitement and ensuing media frenzy will raise the price temporarily. However, there is a chance that rather than a seamless transition, the merge won't happen as planned, or that a controversial hard fork might wind up hurting crypto prices generally. Hard forks are already predicted and might be confusing, especially for novice investors. After Ether's beacon chain and mainnet merge, nobody can predict what will happen next. Some market players are still pessimistic and think that much of the price movement has already happened. Should the merge be postponed in any way, prices will probably fall off, which would be consistent with other occurrences of this in Ethereum's history dating back to at least 2016. Around the merge, we can expect increased volatility, Max Kordak, co-founder of blockchain application platform Lisk, said. Given the current economic climate, prices are more tied to interest rates and inflation than they are the technical advancement of Ethereum itself, said Kyle Klemmer, COO of the Web3 gaming engine Mech.com. Although the merge switches to a proof-of-stake consensus process, it won't increase network capacity or bring down gas prices. The demand for Ethereum block space is largely responsible for the cost of transactions. According to Chris McCann, a partner at Race Capital, proof of stake by itself has little impact on speed or transactions per second or TPS. He said that the transactions per second for Ethereum is now between 10 and 20, with a median of about 13 transactions per second. Switching to proof of stake will not alter this. After the following anticipated upgrade, EIP 4844, commonly known as dank sharding after Ethereum researcher Dankrad Feist, and the scaling technology sharding, scaling benefits will start to appear. According to McCann, the switch to proof of stake has been anticipated by the market for a while. It's now a matter of waiting and seeing if the last tests for Ethereum's transition go off without a hitch. The merge is fundamentally a modification to Ethereum's verification mechanism. A bank acts as the intermediary in a typical transaction by confirming that one party has enough money to pay the other party. Crypto does not use a middleman. Transactions in this alternative financial system are checked by a dispersed network of computers. By operating software that solves challenging problems, an energy-intensive method for verifying transactions, anybody may connect a machine to the network. In essence, the computers are competing with one another. The winners receive fresh coins in the digital currency they are validating after solving the task. Crypto mining, or proof of work, is the technical term for this verification procedure. According to some calculations, the annual energy used in mining is similar to the yearly emissions of whole nations. The merge will move Ethereum on a different, less powerful structure dubbed proof of stake. Computers don't waste resources trying to validate transactions in a proof of stake system. Instead, cryptocurrency investors place a certain quantity of digital tokens in a pool that is shared, and this qualifies them for a lottery. A participant is chosen at random from the lottery each time a trade takes place to validate the transaction and get the benefits. The change is anticipated to reduce Ethereum's energy consumption by more than 99%, which cryptocurrency supporters believe would increase public interest in the technology. Another of Ethereum's major issues, the high network usage cost, may be resolved by switching to proof of stake. Because Ethereum can only manage so much activity at once, its cost to use increases as demand for the network increases. A transaction cost known as the gas fee, which may occasionally reach $200, must be paid by anybody transmitting Ether. Although the merge won't instantly solve that issue, its creators claim that it would build the framework for future enhancements intended to reduce costs. However, several cryptocurrency experts warn that a move of this magnitude would potentially leave Ethereum open to hacking or other disruptions. According to crypto venture capitalist Christopher Collicott, if you make changes to a complicated system, unforeseen consequences will inevitably result. Maximum extractable value, also known as minor extractable value, and possible MEV boost problems following a merge are another source of concern. A miner or validator can earn money by choosing, excluding, or rearranging certain transactions inside blocks. This is known as maximum extractable value. Maximum extractable value boost is a piece of add-on software designed for Ethereum proof of stake. To increase their compensation and outsource block generation, validators can sell block space to so-called block builders, essentially outsourcing some of their validating responsibilities. Maximum extractable value and maximum extractable value boost provide benefits, but they may potentially be abused by dishonest individuals. Some members of the Ethereum community are specifically concerned about the censorship of maximum extractable value boost. Some members of the Ethereum community are specifically concerned about the censorship of maximum extractable value boost relay operators or organizations that, among other things, link validators or block builders. Numerous individuals on crypto Twitter have become more preoccupied with questions regarding maximum extractable value and maximum extractable value boost post-merge, to the point that it was even brought up at the latest Ethereum core developers meeting. Although they are aware of the issue, developers are optimistic that maximal extractable value related problems, particularly those involving censorship, won't pose a significant danger and are continuing to work on making Ethereum a censorship-free system. The price of completing a transfer on the Ethereum blockchain is referred to as gas fees. Because there is a greater need for transactions to be completed at busy times, gas prices usually increase during these times and are denoted in GUI, the smallest unit of Ether. Users of Ethereum complain a lot about gas fees. This is hardly unexpected given that Ethereum's gas price may reach hundreds of dollars during its busiest times, rendering the network unprofitable for many. Although the merge won't increase network capacity, it will convert Ethereum to proof of stake. As a result, it won't affect the cost of gas expenses. The processing time on transactions on Ethereum won't be sped up by the merging, according to the Ethereum founder. There won't be a significant enough shift in scheduling for fresh block generation and resolution after the integration for users to notice. There won't be a significant enough shift in scheduling for fresh block generation and resolution after the integration for users to notice. Another misconception regarding the merger is the window of opportunity for investors to withdraw their staked Ethereum following the upgrade. When the merge takes place, investors won't be able to withdraw their staked Ethereum at once. They'll have to await the Shanghai upgrade, which is the next significant upgrade after the merge. This implies that freshly minted ETH will stay locked and inaccessible for at least 6 to 12 months after the merging, albeit amassed on the Beacon chain. Well, that is a wrap for this video. So do you think the merge will be as fruitful and revolutionary as it appears for now? Be sure to let us know in the comments below. See you in the next one.